To sum up last week though, within the confines of generally how the market is going, if it could happen in the buyer's favor last week, it did. How's it going, guys? I'm Christopher McGee. I'm the owner of Halcyon Real Estate, affiliated with the Keller Williams Market Center in Salt Lake City, Utah. Today is the 22nd of September. Looks like it's post-apocalyptic outside. It's just relatively stormy at the moment. Here we go, autumn. This is the numbers, the nuance where you want to come in order to know exactly what Utah's housing market is looking like from week to week. I'm pulling those numbers right off the MLS and I'm presenting them to you. I plot those points across a graph so you can see how things are trending over time on multiple variables of the market, not just one, and then creating a big story. So let's go ahead and dive right into what it looked like last week. So things moving essentially as they have across the entirety of the third quarter right now. I wouldn't say anything is poised to take off in a direction that we wouldn't expect it to go. To sum up last week though, within the confines of generally how the market is going, if it could happen in the buyer's favor last week, it did. Inventory came up. That's good for buyers, gives you more choices. Last week, both average and median home prices dropped. And last week, average interest rates across the nation came to new lows for the year, 6.1 somethings for conventional loans. Now that did tick back up on Friday, and that's about where we stand right now, is where we left it on Friday, but it's still trending down for sure. Now importantly, home prices are trending very moderately up, and so it's important to temper us buyers' expectations with that caveat. And if interest rates continue on their downward trajectory, and if that goes into next year, this would not be deflationary for housing, but we will take what wins we can get when we can get them. Let's go ahead and look at the numbers. All right, so here's where things are in the Utah housing market. As of September 22nd, 2025, our current inventory stands now at 13,610. That is the highest we've seen our inventory this year and for a long time. This looked to level out once it got just under 13,600. It's been between 13,300 and 13,600 since about June this year, but we have eked it up to just over 13,600 now. The prior week's average days on market was 58. That's down from where it's been hovering since late July. I would still say this is trending up. Last week's average list price came to $712,638. That's down from the previous week, still trending moderately up. Last week's average sold price came to $702,502. And so that difference between average list price and average sold price last week came again in the buyer's favor to the tune of $10,136, closer to zero difference between those two numbers than the previous week. Median sold price last week came to $514,995, so basically $515, significantly lower, and I just like to see that we're getting more people experiencing, $200K lower than what average price point actually is. Last week, the number of homes that sold came to 506 here in Utah. That's down from last week. While we see this jumping somewhat dramatically week to week, it's frankly hard to imagine a steadier trend line across the last couple of quarters than this, hovering at just under 600 homes sold per week in Utah across this time. Now currently we have 5,180 homes under contract in Utah. That's up a bit from the previous week. We see this trending slowly lower, looking like it's trying to make a comeback over the last few weeks. We'll see where it goes. Last week, the number of price reductions that happened on homes on the market came to 1,412. That is up from the previous week, trending up as we see it from the beginning of quarter two, but looking to have leveled off, maybe even started to trend back down in the last couple of months. Last week, the number of listing contracts that were either canceled, expired, or withdrawn from the MLS came to 402. That's down from the previous week. This is still definitely trending up overall. And finally, interest rates right now for a 30-year fixed rate conventional loan, national average stands at about 6.35%. That's up, like we said, from last Monday. Still right in line with what its downward trajectory is though, so we'll see how long we keep that trajectory. I know there's always a little bit of confusion whenever there's big news that the Fed dropped the interest rates and then we don't see mortgage interest rates actually drop. That's because, as I've said in other videos, when the Fed drops rates, they're dropping what's called the federal funds rate. That's the interest rate that banks charge each other to balance out their coffers at the end of any given day. So a closer and more immediate measure of what we would expect mortgage interest rates to do is to watch the bond market. When the federal funds rate moves, mortgage interest rates will eventually follow suit in that trending direction, but it's not something that we see overnight at all. And often because it can be predicted to some degree which direction the Fed is going to go with their federal funds rate, the mortgage market prices that in to what they expect to happen before the move actually comes from the Fed. That's what we saw the last couple of weeks. And that is it for this week. Thank you for watching, guys. If you have any questions about the way I presented anything, where these numbers come from, or anything, feel free to hit me in the comments. I'm always happy to respond. If you or anybody you know is looking to move here in Utah, especially in this last quarter of 2025, I hope you are comfortable reaching out to me. I'm gonna be happy to hear from you. I think I know this market like the back of my hand. I'm buttoned up professional, and I will be happy to work with you or anybody that you send my way. And of course, as always, if this is the kind of data that you want to stay on top of, you will not find a better way than to hit that subscribe and stay up on it with me from week to week. Thanks for watching this week, guys. We'll see you in the next one. Bye-bye.